Hi, Glenn. Thanks for joining us today.
What a pleasure. Thanks for having us.
Let's start today with your giving us a brief overview of the history of the company.
Golden Valley Mines was incorporated in the year 2000, and here we are 20 years later with a very evolved business model. It was actually born partly out of a hostile takeover. We had lost a company that we had built into a mine to a Chinese metals company. And we took a hard look in our mirror and basically said, is there anything else that would be at risk if we don't make adjustments? And Golden Valley's property portfolio hit the radar immediately, and we decided to make some changes to our strategic plan in the aftermath of that. And Golden Valley is really born from that experience. So it's quite different in the way it operates day by day, month by month, and year to year compared to our peers.
Now, Glenn, there are hundreds of thousands of earth scientists in the world, yet it is estimated there are between 10,000 and 12,000 economic producing mines. What exactly do you look for when prospecting?
That was a good opening to your question. There's actually 1,000 geologists just in Quebec, and so probably not far from 15,000 or more across Canada. And you throw Russia, United States, Australia into the mix, it's a very big number of earth scientists. Not all are degreed. Some of the best prospectors are pure prospectors. But certainly how one looks at existing data sets is an art. And so there are some very high-level people using artificial intelligence. There are some very basic, true-to-the-wool prospectors who hand streams. They're both different ways of using existing data, vectoring into a place, and then trying to assess its economic potential. So we have a couple of proprietary tricks that we use, mostly geophysical technology together with experience, and that's how we find the bulk of our properties and opportunities.
Golden Valley has international operations, ownership in other companies, and assets in developmental projects. This is an unusual business model for a junior mining company. To what do you credit your success?
We definitely work within our capacity. So part of the business model was to off-shoulder expenses that are usually debilitating for small companies, junior companies. So we took all of the exploration risk, because that's the highest cost part of the business, and we off-shouldered it into subsidiaries that are also public companies, but that we control. So that was a way for Golden Valley to remove the expenses, retain equity in its own subsidiaries, and the subsidiaries do the exploration. So we've evolved that a little more into royalties from a producing gold mine in Quebec. We've evolved that into grassroots exploration and also a subsidiary that works in Australia only. So those are quite unique, I suppose, strategies for a company as small as our own. But to date, it's proven to be quite effective.
Glenn, now give us an overview of your assets.
Sure. Well, because Golden Valley actually owns equity in its own subsidiaries, a couple of numbers. So it actually owns 44.8% of its main subsidiary called Abitibi Royalties. And to that, as I've been educated by our financial people around us, you would add my own personal shares and the shares held by other board members. So in fact, we control about 56% of Abitibi Royalties. That's important because it trades just under $20 Canadian. We have 5.6 million shares. So by far, that's our dominant asset. It's important because it owns a royalty in the largest gold mine in Canada on the east side of that gold mine, which is also where most of the current exploration and development are being done. So that royalty actually covers most of the zones that are being developed for near-term production at Canadian Malartic Gold Mine, including the Odyssey North Zone, Odyssey South Zone, the Jeffrey Open Pit, which is in production at this time, and the East Malartic deposit. So those are very important assets in any public company, but in a single focus, small cap royalty company, that's enabled us to actually generate cash, pay dividends back to our shareholders, and most of our catalysts relate to ongoing development and exploration at the Canadian Malartic Gold Mine.
What are some near-term deliverables that shareholders can expect through 2020?
Well, certainly the main catalyst within our group has been the subsidiary focused on the royalties business called Abitibi Royalties, which is a royalty on the Canadian Malartic Gold Mine. And, you know, that's a good thing to have a royalty in the largest gold mine, not just in Quebec or Canada, but North America. So Canadian Malartic produces around 700,000 ounces a year now, and Abitibi Royalties owns a 3% NSR, net smelter return royalty, on the east side of that deposit. So that's quite a good asset to have, and that probably explains most of our trading and market performance over the past few years.
Who are some of the key players on your management team and board of directors?
Well, our board is quite small, as it should be for a small micro-cap company. So we have 4 board members. There would be a gentleman named Jimmy Lee, who's a Korean metallurgical chemical engineer from the University of British Columbia, and actually the chair of an NYSE-listed company called Mercer International. Joe Groya is another board member, a very experienced or seasoned board member. He used to be the Director of Enforcement for the Ontario Securities Commission, more or less Canada's version of the SEC. So he's my lead director and provides a lot of good governance oversight and experience in capital markets. The third member is Bill McCartney from Vancouver, who founded what was at one time the largest accounting company overseeing public companies in Western Canada. So along with myself, that would be our board of 4. And I suppose the last thing I'd leave you with is that the board of directors are the major shareholders of the company.
Now, tell us about the essential value proposition, Glenn. Why should investors take an interest today?
Well, most junior mining companies are based on the hope or the promise. So our next drill hole, based on our experience, could be this. We hope it's that. Somewhere in between are the realities of day-to-day for most junior mining companies. That's really not our story at Golden Valley anymore. We own shares in our own subsidiaries. One of them owns the royalty in the largest gold mine in Canada. It pays a dividend, which is greater than all of Golden Valley's costs. So G&A, listings, legal, audit, myself, any of the investor conferences, all of the costs are lower than what we receive in dividends. So no dilution. That's a fundamental part of Golden Valley's value proposition. Separate from that, because we control the other subsidiaries, they're exploring aggressively, both in Australia and in Quebec and Ontario. And knowing that all the value that's been created to date, including the royalty proposition, came from grassroots boot and hammer prospecting, that's where we focus our efforts on the subsidiaries. We keep our burn rate low. We spend the money like it's our own money because most of it was in the early days. And we cross our fingers and hope for the best.
An interesting story, Glenn. Thanks for being with us.
And thank you very much for the courtesies. Have a nice afternoon.